Hi, it's Paul again from Applewood Property Solutions, and today I'd like to talk to you about capital allowances and how you can take advantage of them to help make your property investing much more tax efficient. Now, what are capital allowances? To help you grasp the concept, let's imagine you've purchased a factory for £100,000. A factory is considered a commercial property, and there's no debate about that classification. Within the factory, you'll find various installations such as wiring, plumbing, toilets, and even a kitchen. These are all separate from the actual building structure, and they fall under the category of capital allowances. So, out of the 100,000 you've spent on purchasing the factory, approximately 15 to 25,000 can be attributed to these installations. From an accounting perspective, a capital allowances surveyor would evaluate the property and determine you can claim 23,000, for example, as capital expenditure on the wiring, plumbing, etc. The remaining 77,000 represents the cost of the property itself, the bricks and mortar, if you will. Now, why is this important? Well, you can't offset the cost of the property against your tax bill. However, the capital allowances, in this case, the 23,000, can be deducted directly from your tax liability. This means that even if you made profit of 23,000 this year, the capital allowances would negate the tax you owe on the profit. That's a huge benefit. Now, I know what you're thinking, but Paul, I don't own a factory. I've got a buy-to-let property. Well, this is where it gets interesting for you. The concept applies not only to the factories, but also to holiday let and serviced accommodation properties, as they are considered commercial by HMRC. So, if you purchase a holiday let property, let's say for 300,000, you can potentially claim capital allowances ranging from 15 to 25% of that amount. In this example, let's say that's 50,000 of potential capital allowances, which translates to £50,000 of profit that can be made before you have to pay any tax. Similarly, if you convert a buy-to-let property around 100,000 into a serviced accommodation, you could potentially claim capital allowances of 15 to 25,000. This means you could generate that amount of tax relief on your income without even acquiring another property. Of course, there are specific criteria you must meet, but the possibilities are incredible. Now, keep in mind that different accountants have different areas of expertise. Your regular accountant may not be familiar with the intricacies of serviced accommodation and holiday lets. That's why it's highly recommended you consult with an expert in capital allowances who can guide you through the process. Although there may be a fee for the services, the benefits of maximising your claims and significantly reducing your tax bill far outweigh the costs. To summarise, capital allowances are a massive opportunity to offset expenses, generate tax relief and boost your profits. By understanding this concept, you can confidently navigate the world of serviced accommodation, holiday lets and even rent-to-rent strategy. For more information on property, please like, share and subscribe. Thank you for watching, and remember, learn, grow and turn property into prosperity. Thank you.